In an effort to quell soaring inflation, the US Fed Reserve increased interest rates by 0.75 percentage points, the highest rate hike in 28 years. The last time the Fed raised rates by 75 basis points was in November 1994. The latest move is part of Fed's rate hiking cycle, and more hikes are expected to bring down retail inflation to the targeted 2% level. Although the Indian inflation rate is better than that of the US Fed, interest rate hike will have implications on the Indian economy. Let's head across to Sakshi Batra to understand what is the kind of impact this will have on both consumers and corporates.
The US Fed has undertaken the highest interest rate hike in 28 years as it has raised the interest rates by 75 basis points. Now, the last time the US Fed had raised these rates by this much was back in November 1994. And what's more is that this may not be it, as the Federal Reserve may continue to raise rates even going forward to bring down prices and to tame the red-hot inflation in the US. But how will this biggest rate hike by the Fed since 1994 really impact consumers like you and me? Well, one, there could be pressure on the Indian rupee. The rate hike could further weaken the domestic currency, which already has been depreciating against the US dollar and now stands at over 78 per dollar mark. Second of all, there could be imported inflation, which could be on the rise, as inflation back home could gather steam through the currency route now. Third of all, stock markets may also continue to feel the heat as the FI outflow may continue. Foreign investors may continue to sell their Indian equity holdings. They have already sold over 1.9 lakh crore rupees of shares in 2022 so far. Next, gold prices may also continue to soar. A rise in the short-term interest rates in the US and the bond yields increase the opportunity cost of holding gold, which yields no interest. So keep that factor in mind when you go out to buy gold. Now, next of all, there could be job cuts. As the Fed tries to tame inflation, rising rates may also spark a period of slower economic growth, which could result in some layoffs or even recession, as is being widely discussed. However, it is still not in a panic stage right now, as the Fed has said that they will be able to tame inflation without causing recession to calm nerves.
If you like the video, do like, comment, share and subscribe.